Hey, welcome to Let's Talk Money with Money T and Simply C.
We will be discussing financial behaviors, past experiences, relationships, and more. We're going to show you how all those things play a role in your financial decisions.
Talking about spending plans, saving and investing, and identifying your behaviors with money.
All of these things will help you jumpstart your road
to financial freedom.
Living just enough for the city I'm living. All my dollars.
Hey, welcome to Let's Talk Money. Thank you guys for tuning in. I'm Money T.
And I am Simply C.
So last week, you guys got to listen in on the girlfriends.
They're crazy girls.
Yes, Lord. Talking about traveling on a budget and all the wonderful memories that it brings.
Yeah, that was some good stuff. They are hilarious.
Girl.
Woo! Well, this week we have brought back Johnson and Curry, the tax ladies. Last time they were here, just dropping so many nuggets.
Yes.
And I had lots of people reaching out to me just wanting to get more information. And I really love the part about the recovery rebate, just helping people get those, stimulus checks. Oh my God, it was right there, but it wouldn't come out here.
Sometimes it happens.
Yes, so we have
about the brain darts.
So we have Shay Johnson and Melanie Curry from Johnson and Curry Accounting. Welcome, ladies.
Thank you.
Thank you for having us.
Yes, it's our pleasure. Like, this is a partnership now. Y'all ain't going nowhere.
Right, exactly. And when we had questions from the last time you guys were on that we didn't get to because you had so much knowledge to give us. So I just want to out the gate, if you don't mind, just start off with filing status and tax brackets. If you guys can talk about that.
Okay. Sure. So you want me to go first? Okay.
Roll with it,
She
honey.
did say I was going to go first.
All right. It's all good. I'm Denetrika. I go by Shay. And filing statuses are what you're is what you use when you're filing your tax return. So you'll see on your on the form 1040, you'll see these filing statuses, and they are single, head of household, married filing joint, married filing separate, and then widower. And we'll kind of identify and give you a description of what those are. For single is if you're an unmarried individual, no dependents. Head of household is if you are also unmarried and you pay more than half the cost of maintaining your home, and you also have qualifying children, or it can be an adult as well. If you take care of that person and provide half of the cost of their expenses or their bills. Also, married filing joint is taxpayers who are married, and married filing separately are taxpayers who are married and choose to file separately. Or you could also use this if you're married and you're separated for a moment. You would also use this if you're separated more than 6 months. So you would also use that if you wanted to, or you can also continue to claim married filing jointly. It would just be up to you.
So I have a question about filing head of household. So is there a cap? Like, can you make too much to file head of household?
No. So what determines head of household? You just have to be unmarried and have a dependent.
Okay.
You have to have a dependent. So you have to be maintaining a home for another individual.
Okay.
And there's no age limit on that individual. The only difference would be in the credits you would receive for head of household. So if it's a child, then you can get additional child tax credits. But if it's an adult, then you can get other dependent credits for adults.
So filing head of household, you have to be unmarried. Even if you're separated past the 6 months and you have a child that you're caring for, can you then file head of household?
Yes, you can.
Okay.
Yes.
Look at you.
I'm
so proud
trying
of
to
you.
help somebody, honey.
Yes.
Yes, you can. Yes.
Okay. I'm trying to help them not go to jail. That's what I'm
Right.
But
Yeah.
you both cannot file the same dependent. So if you're married, you have children, you
Yeah.
can't file the same child on both returns.
And I think they've put some things in place for that because they can now tell when that social security number has been
Yes,
used.
you are right.
Where in the past,
Yes.
it wasn't that way.
Yeah.
People would file in the same kid, but now you put that number in and be like, girl, this
Yeah.
thing has already been used. That child has been trying. She tried it.
Don't even try it.
Yeah.
So, also for these filing statuses, there's an amount that the IRS gives you to take off your annual income, and it lowers your tax liability. So the amounts for single is $12,400. So if you look at your 1040 and you see that amount, you'll see that it lowers your annual income, and then
Right.
you're taxed on that bottom line. It's called your adjusted gross income.
Okay.
So that's the amount you're taxed on. So for single, it's $12,400. Head of household is $18,650. Married filing jointly is the $24,800. And then married filing separately, you'll be surprised, but it's about half that, which is $12,400.
Because they'll treat you as a
Yeah.
single individual. But
Yeah.
the thing about the married filing separate status as well is it also makes you, it disqualifies you for some credits. Like you don't get to file. It's just, there's a lot of credits that you won't be able to
Earned
file.
income
when you
credit
do.
is one of
Earned
them.
income credit is
Yeah.
one of them. You do not qualify.
Yeah.
Some tuition expense, not tuition expenses, but tuition credits.
Yes.
But there's just a list of things that you just don't get to file.
You don't get
like
to
your student loan interest.
Yeah.
So it's not favorable to file
It's
married
right.
At all.
separately.
No.
It not. It's also sometimes a little bit more difficult, and we could probably get into that later. But there are like innocent spouse forms that you can file. Like if you think that your spouse is going to owe, and you file jointly, that excludes you from being responsible for
For their
those
taxes.
taxes.
Yeah.
Yep.
And
A lot of people don't know that.
that's the big nugget number one.
There you go. Right.
I'm gonna count the nuggets on this. We can hold fingers today. I have a. Oh my God! It left my. Oh, so if
That's
you
okay.
file married, oh, never mind. I'm gonna have to come back to it.
That's okay.
I'm gonna write that thought down when it
Okay,
comes
cool.
back to me in case
Yep.
somebody's talking. Dang.
It's okay. We'll touch on it next time. And then the last one is a widower. If you have a spouse that is deceased and you have a dependent, you can also claim that filing status.
And that's only for the first year after.
Yes.
So it's basically a married filing jointly status. But since your spouse is deceased, you'll get to use that married filing jointly status that
Yes.
first year after they've passed.
How could that benefit someone?
Because they get the highest, highest standard deduction by doing that. Like, because you get double. It's like 24,800.
Right.
That is kind of taken off your income. Yeah, so it puts you in a different tax bracket. That's just,
I just wrote down number 2.
I mean, especially with those, those individuals who lost their spouses due to, COVID and any other thing. Like this is, and they probably don't know. And if you don't have a tax professional who knows this information, you could easily lose out on,
$12,000.
Yeah.
Extra.
Yeah,
that extra
$12,400
deduction.
Yeah.
So it's very important.
Man, that was good right there.
Thank you.
I was going to ask you, was it better to file married filing single versus single if you're separated or whatever and don't have children or have somebody to claim as a dependent?
Well, if you're married, you have to file one or the other status. It's either married filing jointly or married filing separately. So to qualify as single, you have to be unmarried.
Yes.
Period.
Point blank.
But based on the IRS, yes.
Yes.
We know we have complicated relationship statuses, but according to the IRS.
According to the IRS, we have to, yeah. However,
That's nugget number
You know.
3.
you are able to file as you may. However,
Okay.
if you're married, those are just the two ones that they require you to
Okay.
file as. So.
So did you have something else? 'Cause I got another question.
Okay.
Like, I want to get yours out before I start.
Go ahead.
So itemizing. So is that a yes or a no? Like,
Well, it depends. There were some recent tax changes under Trump where they are trying to make it more favorable to go for the standard deduction. So we talked about the standard deductions, which is based on your filing status.
Yes.
Itemizations, there's an additional schedule that you would file. So you can have your tax preparer itemize and run it up against the standard deduction, and you would take the one that's most favorable. So when you itemize, that's a Schedule A, and you get to deduct things like taxes that are related to your home, sales tax, property tax, real estate
Medical
taxes,
expenses.
medical
Dental
expenses,
expenses.
general expenses,
Yeah.
charitable contributions. They really did change that Schedule A and try to make it a little bit more difficult to. You used to could deduct employee related expenses, like from working in your home, or if you had worked for an employer, you could deduct some expenses, but they've taken a lot of that off the Schedule A. So trying to make it a little bit more harder for people to itemize, because it's a trigger. I mean, it triggers audits. You know, you can hide a lot of things in the Schedule A that you want to deduct, but you would take the most favorable deduction. So if your itemized deductions are higher, then you would itemize. If the standard deduction is higher, then you would take the standard deduction. So the thing to think about there is, so if I'm single and my standard deduction is $12,400, for it to be favorable for me to itemize, then I would need to come up with more than $12,400 of expenses.
Exactly.
okay.
And a lot of people don't. Probably.
No.
Yeah.
Not maybe the average taxpayer, no. But when you start getting to making bigger money, then you start, having bigger expenses.
Yeah.
Then that's when itemization really come
Especially
into
with
play.
medical expenses. You know, those can hit you, just, from being hospitalized,
Yeah.
and if you don't have the right coverage, and if you're paying that out in a year, you definitely want to itemize so that you can, because once you pass that standard deduction, that extra money that you're spending, it comes off your income as well. It comes off, to even lower your taxes even more.
Gotcha.
So just say if you're single, $12,400, and you made, just say you've made $80,000. So you would subtract the $80,000 from the $12,400. You would have that bottom line. But if you itemized and you had $18,000, then you would do the $80,000 minus the $18,000 from itemization.
So really, the fact that they changed the standard deductions it didn't hurt us. It wasn't necessarily anything negative.
But there was a lot they did with that. So it did help because they did increase it. They doubled it. So it was basically like years before it was like 6,000. Now it's 12,000. So they did double that. But they also took away where you could do the exemptions, where you were getting, depending on how many dependents
you had, you would get
an additional exemption amount
for each child.
Okay.
So they kind of took that
or
away,
each
but added
each everyone that you filed on your return, you would get an additional amount. They took that away as well. So there was some trading that they did.
I don't have any.
Moving around.
I didn't notice it because I don't have any.
Yes.
Okay, cool.
But the thing about medical, I do want to say for medical and dental, there is a floor. So you have to exceed 7.5% of your adjusted gross income, which is your AGI. So before you can even deduct medical expenses, it has to be higher than 7.5% of your AGI.
Okay.
But I do know that COVID, with COVID, they made some changes to that as well. So, you might want to look at that to see, because I know that a lot of things that are related to taxes, with the COVID, with, the new tax changes, they're allowing certain individuals or people to, like families, to deduct some things at a 100%. So if you would just visit irs.gov, you would be able to find out all that information.
Or you can just reach out to Johnson and Curry Accounting.
Oh, yeah. That would be another good thing.
That is hilarious. Plug it every time. Every time you want to, you plug it. Because I want to see increase.
Amen.
But yeah,
Amen.
I want to see that. I want to see
Thank
increase.
you. Thank you.
So go ahead. Girl.
I know that that you guys wanted to tell us about this unemployment update.
T was just burning over here. Girl, just gonna take it. Don't take it. No. Oh, just go ahead. So, unemployment.
Okay. So under the American Rescue Plan, which was just signed by Biden, they determined that you can deduct up to $10,200 of unemployment income. That's not going to be taxed. So unemployment income is taxable at the federal level. You have to check states. Every state is different. But they're going to exclude $10,200 of unemployment. So if you only made $5,000 in unemployment, then you get to deduct $5,000 from your income. You don't have to include it in your income.
Yes.
So you will not be taxed on it.
And it's funny because we talked about that last time too.
Yeah, we did.
We did.
Yeah.
Yes.
And the funny thing of it is that not only for last year, but it's for this year as well. So as long as you're receiving the unemployment benefits.
Yes.
So just say if you made 18,000, or not really made it, but you received 18,000, then 10,200. Is it 2,000?
10,200.
Yeah, 10,200 would not be taxable, but the other amount would. So whatever is left
Anything
over would be
over that,
taxed.
yes, would be
anything
taxed.
over that.
That's awesome.
It is.
It is.
And it helps because a lot of people receive a lot of money in unemployment with that additional $600 they were given a week. So it really inflated a lot of income.
Yes.
So that's just giving some people some tax relief. That will make a big difference on whether you're owing or getting a larger refund.
Yes.
Yeah, that's some good stuff right there. And that's really helpful for people who were getting it, just like you said, inflating their income and then to have to pay taxes on that.
Yes.
That was going to be an owie.
But there are two things to note with that, though. Some people filed their taxes. Like the act didn't pass until March 11th. So there were taxpayers that filed their taxes prior to this. So the IRS is suggesting that we do not amend at this time. You don't amend your return. They are still determining how they're going to reissue. If you were to get more funds back, then they're trying to determine how they're going to reissue those funds. If you have not filed yet, which is great, some people that waited, it's actually a good thing, then the tax software has been updated to reflect that exclusion of income. So
yes. I know our tax software has been updated. We don't know about anyone else's, but
so yes, you can come get your taxes prepared if you have that unemployment and you have questions about it.
Yes.
We can help you with that.
yes,
Now,
definitely.
What's the new date? Because I heard that it changed.
Yes, it did change.
It is April 17th.
May.
May 17th.
I'm sorry, May 17th.
Yes.
My bad.
Okay.
I apologize. You were correct. And May 17th. Yes.
That's what's up. Yeah, May 7th. I'm glad they offered that extra time. I don't know about nobody else. 'Cause
Man.
I need it. So I can pull all my stuff together for Johnson and Curry.
And we'll be
And
here.
that was only for individuals. That was not for small businesses if you're filing other tax forms. That is only for individuals.
I guess I better work a little faster. I thought I had
Well, if
some
you're filing a
extra
1040
time.
Schedule C, yes.
So you're-
but if you're fine with the
Yes,
Schedule C.
with the
Because
Schedule C.
1040 Schedule C is for solely owned LLCs or
Sole
sole
proprietors.
proprietors. businesses.
Oh, okay.
So
But
you're
if-
fine.
But if you're like a partnership or S corporation
Or C Corp. Yeah.
that was not extended.
Okay,
I
gotcha.
seriously started panicking. Like for real. Because
We would have told you.
I
Yeah.
talked about my little spreadsheets that I done pulled together for it. Now that I got to do more, so I need that extra time to get my
Yeah.
little self together.
Yeah. We have what we call the late filers. You know, the ones that wait until about a couple weeks before.
I promise I'm trying not to be that girl. I'm trying not to be her.
But wouldn't she be able to ask for an extension?
Yes.
She can't. And that's the thing about extensions. You can request extensions, but does not extend the time that you have to pay. So
Yes.
you still have to do an estimation of what
What
your
you
tax
owe.
liability
Yeah.
will be, and you still have to make a payment. You just get
Oh,
an
okay.
extension to avoid the penalty for late filing because there's two different penalties that are associated
Yeah.
with filing late. So you have the penalty for late filing, and then there's a penalty for not paying.
Not paying.
So the extension just keeps you from incurring the penalty for late filing.
Okay.
Okay.
That's nugget number 4. Did you write
Number
that down?
4, I'm writing it right here. For late penalty.
That's good to know. I didn't know that. I knew that you could ask for an extension, but okay. So
Yeah,
you're
you
just
still are penalized.
in some kind of if you
some
don't
form of
pay in
fashion.
some
Yeah.
form, you're penalized.
in some form of fashion.
Man, that is some good stuff.
Well, that's why we encourage our business owners to also set up estimated payments throughout the year, and that way you'll avoid that. You'll avoid owing the following year. If you were to estimate your payments throughout the year, you'll avoid paying the following year. So we kind of encourage that, especially to our small businesses.
Okay, I was going to say estimate pay. Hold up.
Mm-hmm.
But so you're speaking to the small businesses and not individuals.
Yes.
Okay.
Yes. It only, I think I said small businesses.
I'm sorry.
That's okay.
No.
That's okay. But I'm only talking about small businesses that has, some money due, a lot of money due at the beginning of the year of your tax year.
Oh, okay.
You may want to have your accountant, such as Johnson and Curry Accounting, or any other tax professional, set you up on estimated payments. It's quarterly payments that you pay, and that way you don't even have to worry about your balance being large.
Yes.
at the next year.
I was listening to some video and they talked about that paying quarterly so that you don't have the shock. So if your tax bill is $2,500 quarterly, it's not the shock of $10,000 at the end of the year.
That's what I'm trying to explain.
Yeah.
If you broke that $2,500 up, for 3 months or 4 months, you probably can pay seven
50.
something, 8 something, a month versus then, waiting, and then you're looking at 10,000 at the beginning of the year. I just don't.
I don't want
pay it when you got it and just get it over with. That would be my advice.
Yeah, that plan and budget. So you open up an account or something and here's your tax account.
Yes.
And every month you make that payment and quarterly you put that money into that savings account specifically for taxes.
Yes.
And then just pay it quarterly. And maybe even if those that have that discipline, you can pay it annually, whatever, but quarterly makes it less painful.
Exactly.
Like your property taxes on your home. If you get them, you either wait for that bill to come at the end of the year or you pay it throughout.
Yeah.
Yep.
Yeah.
So that's, and I think I explained this in one of our other shows, just talking about property taxes and even with the car, with the Christmas savings, I kind of put that money in that Christmas savings account. And they release it, if you will, in November. And all of our tax payments are due the end of December in Missouri, right? The last day you got to be paid by then.
December 31st.
And so just by saving it with the Christmas money, then it's already saved and all you have to do is pay it. So whatever strategy works for you is just developing a strategy to save money for whatever.
Yes.
It's getting a strategy. That spending
and
plan.
being consistent. And that's another thing, because if you set it up and you don't pay it, then you're still looking at the liability the next year. So being consistent is key. Even to running a business.
Yes.
It is.
Without consistency, you it's hard for you to keep up with, your business, your finances.
Your clients, all of that. Because, you want to stay in touch with your clients so that they remember you. She ain't thinking about me.
Let me go find someone else. Exactly. Yes. So
I've been seeing this ad for Pookie, for the other firm, and they are more in front of. So we think about what's in front of us. So being consistent.
All right.
So, what else? What other nuggets y'all got for us?
I asked that question for all those wonderful people out there to get stimulus checks.
Okay.
So, do you have to report them on your taxes?
All right. I think we discussed the last time about the first and second stimulus. I think we talked about, and we advised you, or we advise your listening audience to have your tax professional, if you didn't receive it, have your tax professional fill out the recovery rebate credit with your 2020 taxes. That's the only way That's the only way you can receive it if you didn't receive it.
Is if you file your taxes.
If you file your taxes.
So if you don't file your taxes, you can't get it.
You can't get it.
So is that for all 3 previous ones?
No, just the 2, just the first and the second one. On the third one that we received, if you didn't receive it, then you have to go out to the IRS website, and they have, what's the name of it, Melanie?
Get My Payment.
Get
My Payment tool. Yes.
Yeah, look at it.
So you would go out there and you would put in the information in order for them to track it for you, and they'll come back with the status of it. And if they tell you that we don't have any record, then we don't know as of yet, because they haven't told us exactly how they are going to handle that. You know, they haven't came out with anything. So once they come
at this
out,
time, they're still issuing them. They're releasing them in stages. So they just started that in March sometime. So
March
they're
17th, and the second was March 24th.
Right.
Yeah. So be patient.
Yeah.
But they're doing it based off your 2019. So if you haven't filed the 2019 tax return for this third stimulus, then that could be another reason why there's a delay.
Yeah.
But you should file your taxes so you can get your stimmy.
Yes. And if you didn't file your 2019, I would encourage you to file your 2020 if you haven't filed your 2019. Just say, for instance, like my college student. I think I spoke about him the last time. He didn't file his 2019. I filed him as a dependent. However, for 2020, he's a single filer. So he didn't file, I filed him as a dependent.
Right.
But for 2020, he filed himself. So he also qualifies for the stimulus based on the fact that he filed himself. Because he didn't get it last year because I filed him as a dependent last year, if that makes sense.
And then he's going to be able to do the recovery rebate credit, right?
Yes.
Okay.
For the 2 stimulus that he didn't get last year.
Yes.
Yes.
Okay. I remember that one. But just having this conversation actually brings a question to mind. So they're going based on your 2019 taxes, and there are people who literally did not work, right?
Right.
So
in 2020,
how do that in 2019, 2020? So how do they get the stimulus? Because it should have been for every American citizen, right? So how do a person who was not working, who had no taxes to file, or are you supposed to do something even though you don't work? What happens there?
You'll still file that recovery rebate credit form.
Yes.
You just won't have any income to report on it.
Right.
But you can file your 2020 tax return so that you can get your stimulus payment. So that's just the recovery rebate credit form, which is a form that you'll file with the 1040.
Because if they're going off of 2019 and you have a lot of Americans that didn't work in 2020, then that's kind of unfair to go off of 2019.
Correct. So you just have to file a 2020 tax return.
Yeah, they're kind of going off both of them. I think what Melanie meant was if you didn't file either or, they're going off one of those.
Yes.
For you to receive your stimulus check.
But if a person did not work so they didn't have anything to file in either one of those years, how do they get their stimmy?
They have to file a 2020 tax return with that recovery rebate credit.
Yes.
Okay.
And you would just not report any income. Basically. It's called a non-filer's return.
Is that another nugget? I never heard of that either.
Yeah. So non-filers are anyone who make less than a certain amount each year that you don't have to file a return.
Okay.
You can file the recovery rebate credit.
Okay.
And if you didn't receive any income at all.
Okay.
Yes. And I was reading a status about, it's kind of dealing with the same thing about, I was on social media and seeing how a girl posted about homeless, individuals that don't have the opportunity to receive their stimulus checks. And I thought about that, that really, but if you know anyone, who, we would do that for them for free. I know I would.
Yeah.
So if they're homeless, have them contact us, reach out, let us know that they're homeless, and we would take care of them.
I think y'all got the producer over here about to cry. That was so.
I mean, because when I seen the status, it just clicked in my head. Like, I've never really thought about that. They don't have anyone to turn to.
Yeah.
So we would be that resource that will, but of course they would have to, they would have to provide certain personal information to us in order for us to do that. But
Right.
we would
Need
definitely
a valid
do it for 'em.
ID,
Yeah.
and a valid social security number.
Yes.
Man, that to me, that just makes a difference. It could be a hot shower, make a really big difference in that person's life just to
Yeah.
get hands on that money,
Yeah.
just
Mm-hmm.
being able to take a hot shower. Just think about it.
Right. Or to feed themselves.
Feed
for it.
themselves.
Yeah.
But just think about how good a hot shower feels,
Yes.
like for real.
Yes. Yes.
So,
Yeah. So we will definitely just have them reach out to us. We'll give our, contact information at the end. If you know anyone, we will definitely help them out in that area.
That is awesome.
Because we want them to get their payments as well, right?
Right.
It's unfortunate that,
So, I have a question about this American Rescue Plan. I need to watch the news a little bit more. I ain't gonna lie. But can you tell the listeners about this plan, please?
Well, the American Rescue Plan is a big COVID relief plan to just help individuals and businesses with some type of relief,
Yeah.
type of economic relief.
Yeah.
So it's a large document. You can, if you're into that and to researching, you can go online and you can find. It's a large document. So, but there are just different benefits for small businesses and individuals. One part of that American Rescue Plan was excluding up to the $10,200 in unemployment compensation. There's also some things related to the child tax credit that's coming up.
Oh, yeah. You want to talk about that a little bit? Let's
so a
touch
little
on
bit
that a little bit.
going into July. They're still working out some kinks on how they want to work it out. But so right now on your taxes, you get a child tax credit for your children dependents.
Yes.
And they've increased it for 2021. And they are talking about issuing monthly payments starting in July for advancements of that credit. So I believe they increased it to like $3,030 or $3,600, somewhere between that range. So what they would do is just break that payment down for half the year. So from July through
December.
they're going to cut you a check each month for every child dependent that you have.
Wow.
Yes. And you have the option of either. This is what I've heard. They haven't came out, but they may give us an option. And I say us because I have a 7-year-old who is my dependent. They're giving us an option to either receive those in monthly payments, or you can wait till the beginning of the year when you file your taxes to receive it all at once.
and it's an advance. Is
Yes.
that the key word here?
Yes, advance is
Okay.
the key word.
Yeah.
So when it comes time to, so say you decide to opt into receiving the monthly payments come 2021, when it's time to file your 2021 tax return, you won't receive that full credit on your tax return. So usually if you're used to receiving like the very large refunds, your refund won't be as large when you file in 2021.
Because you're getting it in advance.
Because you're getting it in advance.
Gotcha.
And I will suggest that you do work with a tax preparer next year if you do decide to take those payments, because there will be a form
That we would have to
that we will
complete.
have to
Yeah.
complete to reconcile the amounts between what you received during the year and what you're supposed to receive, because you can phase out of those child tax credits. So if you're not eligible coming, you decided to take the payments and then you're not eligible to receive the total amount, then you could end up owing. So
Wow.
Yeah.
You have to be careful.
yes, you have to be careful. So just give us a call.
So one thing,
At Johnson and Carter.
right.
Right.
So one thing I would just like to kind of toss in there, if you are a parent that, that's just kind of an extra for you, getting that monthly payment, it would be just really great for you to open up an account for your, an investment account for your child and just deposit that money into an account for them.
Yeah.
Yep.
My cousin was just talking about that the other day. We were having a family moment and she was like, if I do get that money a month, I may not do all of it, but I may do half of it. And that's okay too. It just depends
doing
on your monthly expenses.
Yeah.
But put something back for your babies. Yeah.
They have a Unified Gift to Minors Act, you can set up for your kids, and it's under their social security number, so you're not taxed on it,
Okay.
and put it away for your kids.
Yep.
And what is it called again, Tiff?
unified gift to minors.
I mean money too.
Sorry.
UG, is it UGM or something? Is it?
Unified gift to minors.
Okay.
Yeah, act.
Yep.
UGMA is what it's called, an UGMA.
Got it. Thank you.
Nuggets.
Oh shoot.
1 nugget.
4 for Johnson and Curry. We got 1 for Let's Talk.
Yeah, that was, and that was something that I did for my sons, and when my oldest one went to college, and there were different things that he wanted, that money was there.
Wow.
Amen to that. Kids are expensive.
Yes, they
Aren't
are.
they?
They're so
They are.
expensive. Yeah.
They are very expensive. So was that the most favorable thing that came out of the other than the STEMI? You know?
There are a lot of they did a lot of more relief for small businesses, trying to help them out. It's a plan that it wasn't just for individuals, but it's a big document. So, and it's a lot to get into, but there should be more relief for like airlines. I mean, there were just a lot of things that may not be
in there.
Right.
Specifically related to individuals that act was covered. But those were the two biggest things that came out for individuals.
Yes.
I think that's a good segue into the small business portion of this conversation.
Yeah.
Especially if it was some for small businesses. If you know, do you guys have an outline of a couple of things that you can share?
I know, I'm not exactly sure on the American Rescue Plan, but I know that for the PPP loans, they were giving a big one that was a big change for small businesses was that they were giving loans based off your gross revenue instead of off your net income. Because, sometimes as a small business, you have a lot of expenses. So your net income can be very low, or you can even be operating at a loss. Mm-hmm. So they did allow you to use your gross income for applying for those PPP loans. So that can help a lot of individuals or a lot of small businesses when applying for those PPP loans.
That's good to know.
So when we think about deductions, what are some of those things that people could miss?
So for small businesses, you can deduct anything that's ordinary and necessary. So if it's ordinary and necessary for your business. So and it just has to be related to your industry. So lots of times when you're filing with the IRS, they ask you your industry.
Yes.
And so they're going to look at your industry and based on what you filed your return to see if those expenses are something that's ordinary and necessary based
within
on your
business.
industry. So that's where you would start. There's different forms that you can file for being a small business owner. So if you're a self-employed or a solely owned LLC, you would file that on a 1040 individual tax return. If you're a partnership, you do have to file a Form 1065. So a partnership can be an LLC. It doesn't have to be an LLC. You can form a partnership that doesn't fall under LLC. But either way, if you have more than one member in your business, you do have to file a partnership return on a 1065. If you're an S Corp, there is an 1120S that you file for S Corporation. And then for C Corps, you file an 1120. So those are the different main forms that you would file as a business owner.
I'd be so overwhelmed.
And those forms are all besides the individual 1040 and Schedule C, which is the Schedule C is what you'll file for self-employed or sole proprietor. The other returns, the partnership returns, S Corp returns, and C Corp returns, those are all due March 15th. And I remember we talked about that before, and you do get penalized heavily, especially if you're a partnership. It's like $200 a month per partner for filing that return late.
See, that's why I was telling you guys, we didn't know that the cutoff was March the 15th when we had first started. And we were like, what? Didn't know that, and then had the penalty. And our tax preparer, I guess you can like write a letter or something. And anyway, they waived it. They did waive it for us.
Because a lot of people don't know. So that's important to reach out to us or your tax preparer to ask them questions like that to see if you can get it waived or Because a lot of people just don't know. That's not information that they really put out there.
Right.
It's out there, but they don't really put it out there
Yeah.
that way. So, and that's a big penalty to pay.
Yeah, $400 per
Yeah.
month, and if you wait till April
Yeah.
or May,
Or a whole year.
Right.
Or
Yeah.
I mean, I have a client now that's been waiting. They haven't filed a 2019. So
Right. Oh.
those are penalties that will be assessed.
Oh my.
Some of their penalties max out at, a certain amount.
Yeah,
but
they do. Which
at
is
that point, you're like,
Exactly. That's how people end up owing
mhm.
thousands, huh?
yes.
Wow.
Yes.
So I have this question about putting a car in your business or buying a car underneath your business name. And I just kind of want to know what your opinion is in regards to a car and the deductions and what's kind of like the better thing to do.
So you do have business use of vehicles. So if you have a business and you purchase a vehicle, you do want to make sure that you're using it for business. So it's for business use.
Yes.
Or if you do buy a vehicle and it's for under the business name, but you use it for anything personal, you have to subtract or deduct the personal use. So allocate those percentages between
Right.
how much do I use it for business, how much do I use it for personal, because you cannot include the personal expenses on your tax return. So the biggest thing about vehicle expenses, you have to have. There's two methods that you can use for deducting vehicle expenses. You have the standard deduction and then you have the actual expenses. So the standard deduction is a rate that the IRS sets and says, okay, we're going to give you this year for 2020. It was 57.5 cents per mile.
Mhm.
So if you drove 10 miles, that's your $5.70. So, and you would use the standard deduction if you're like a high mileage driver, like if you
Yes.
drive Uber or if you're
DoorDash or any.
DoorDash or anything like that,
Yeah.
then you're probably taking the standard mileage deduction.
Yes.
It's just more simpler calculation.
Mhm.
But then you could do an actual expense, which you would just total all the things that you're deducting for your vehicle. So when you buy gas,
Yeah.
if you have maintenance, oil changes, any type of repairs, any type
Tires.
of tires, anything that you're buying for that vehicle,
Mhm.
you would total up all those expenses at the end of the year. You can compare it against the standard mileage deduction and
Yes.
take the higher of the two. But the thing to note there is that if you're going to do the standard deduction, you have to take that on the first year you put that vehicle in place. So if you bought that and you started using that vehicle in 2020 and you want to use the standard mile, if you want to use standard mileage deduction, you have to take it that first year you put that vehicle in place. Because if you start off with actual expenses, you've got to stick with actual expenses.
Oh,
But you can always switch from standard to actual, but you can't go from
Yeah.
actual to standard.
okay. So say you purchase a car in your business name and it's 50% business and 50% personal, and you make a monthly payment. So would you only be able to deduct half of that monthly payment? How does that work?
Yes. So there are expenses there's the expense for actually purchasing the vehicle, and then there are expenses that are associated with using the vehicle in the business. So for that payment or that lease payment, which would be a lease, or
Right.
I don't know if you paid for it cash, then you would do the depreciation. If you paid for it on a lease, then you have your monthly payment, then you would deduct only the portion of it that's related to the business.
Yes.
So Cash, you saying me walk up in there with $30,000
Oh,
in cash paying for that vehicle?
oh, you're talking about the paper trails.
Let's discuss the paper trail.
Yeah.
Actually,
Yes, let's.
actually, you can walk and pay $30,000.
But they're going to ask a lot of questions,
But they're
and it's
gonna
going to be
ask
some paperwork.
But yeah. So you can pay $30,000 on a vehicle if you have it in your bank account, or however, there are what they consider, if you're what they consider like money laundering, and so you can't just have You can't just have this money and not be able to tell them where this money comes from, where it derives
You
from.
can't have $10,000 underneath your mattress and take it and go to the dealership and say, here, I got $10,000. I want to buy a car.
Yeah, you can do it, but
do
there's
it.
a form that they fill out, right? There's
Yeah.
There's a form you have to fill out. There's paperwork related to it.
Mm-hmm.
And especially if it's business related. Document.
Yes.
Whatever you have support for, if that's receipts, loan documents, mortgage statements, anything, your bank statements, your credit card statements. If you are putting large deposits of cash, validate where that large statement comes, especially if you're going to file it on your taxes. So the key thing for being a business is to just document everything that you have related to your business.
Yeah. Or have an accountant such as us, keep those documentations
for you, that bookkeeping.
Yes,
It's very important.
It's very important when you have a small business because your accountant can also classify, where the money was spent, keep track of all of that for you. And so, it's very important, but you can pay $30,000 on a vehicle, but you just want to make sure that you have it in writing. Yeah.
Man, this time goes too fast for me.
It does.
Oh my goodness. It is. It's almost time to go. It's like, and I still got so many questions.
I know.
Yes.
What's the one thing on our list that you guys want to share pretty quickly? We want to leave a couple of minutes to make sure we get all our information out there.
Let's start with the self-employed expenses, because I think, like, if you're an Uber driver or a DoorDash person, or you're still considered a sole proprietor. I don't know if you know this or not, so you do have to file that Schedule C on the 1040 form. You're your own business, basically. They may look at you like, oh, you just drive for Uber, but you tell them, hey, this is my business and I want to keep track of it. So here's some self-employed expenses that you can deduct on your Schedule C. Advertising, health insurance premiums, any meals and entertainment, that's normally deducted at about 50%. Any education or seminars you attend, any internet service that you need, your phone services. So there's a lot of expenses. But like Melanie said earlier, you have to go by how the IRS classifies your business.
Okay.
Just say if you're an Uber driver, they're probably going to look at you crazy if you try to claim advertising expenses. I mean, because Uber advertise you. So what
what expenses do you have?
What expenses do you have? So,
That is awesome. Thank you again for coming. I'm already looking forward to the next time.
Yeah.
That time will probably be after tax season. And so it'll be nice to start educating people on what they can do to prepare for the next year, or even anything that will help them towards the end of the year, any taxes and different things that they need to look into. So thank you for coming, Shay. And
Thank you for having us. It's a good time again.
I know, it's always so good. Why don't you make sure everybody knows how to get in touch with you?
Okay. Again, I'm Melanie Curry and Denitra Johnson. We're at Johnson and Curry Accounting, LLC. You can find us on all social media platforms. We are at Johnson and Curry. So and is spelled out. So A-N-D. So Johnson and Curry. If you want to give us a call, our number is 816-265-1316.
Yep.
Awesome.
And I am Money T. I am a travel advisor. You can find me on Facebook and Instagram at Priceless Destinations. And I have a website, pricelessdestinations.com. I also have a mini budgeting course. You can find that at Budgeting Behaviors on Facebook and Instagram. And you guys really should take the course. It'll set you on a pretty cool path, discovering your relationship with money.
Yeah.
And I am Simply C. You can find me at Simply Custom Wood Designs on Facebook and Instagram. Simply Cupcakes on Facebook. And check out the website Advocating Daughters. Just another plug, you can also find T's budgeting course on our website. Let's Talk Money should be pinned in the announcement section. So take the course.
Right.
Okay. Make your kids take the course.
Of course, I
Yeah.
took it and I love it.
I know my sister-in-law, seriously, she took it and she called me like so excited. Like, oh my
Yeah.
God.
She gave so many nuggets.
Yeah, so many nuggets. She was really excited about some of the things she was doing, but there was some other things that she was like, "Oh, I'm gonna get that." Yeah. So I strongly encourage you to take the course. Listen, it's been fun. I hate for y'all to go.
I
but
know.
we gotta go.
We coming back.
Join us every Monday at 8 a.m.
And 8 p.m. Central Standard Time.
on the BSB Radio app.
We out.
Peace, y'all.